GST impacts all Australians on a daily basis, whether it be from buying groceries to paying a household electricity bill. This broad concept of GST is that all taxes are levied on the consumption of goods and services. GST was introduced as a result of 80 to 90% of the Australian economy comprising of services that did not attract service charges. At 10%, Australia has a relatively low level of GST in relation to the United Kingdom's 20%. Therefore, increasing Australia's GST is a simple and effective way to boost government revenue. Based on 2014-2015 data, for every 1% extra of GST, $5.4 billion of revenue is generated. This will increase to $6.5 billion in 2017-2018. Therefore, an increase of GST to 15% would add more than $25 billion per year to government revenue.
Where would this increase in government revenue go? To appeal to taxpayers, all Centrelink payments would need to rise to combat the increase in grocery and utility bills. This may trigger an adjustment in lowering income taxes to ease the effects of an increased GST. An increase in the GST rate will directly affect the current spending power of low-income earners. This may mean low-income earners are unable to afford items that they can currently afford, as GST will eat away more of their budget. This increase will positively impact future low-income earners, the majority of whom are university students. Furthermore, with the average life expectancy of Australians continuing to grow, this increase in GST will help to finance this cost. Therefore, increasing Australia's GST rate from 10% will help generate additional government revenue, but with only 47% of goods and services currently being taxed, this directly impacts to what extent revenue can be generated.
The current GST base includes most consumable goods and services, however there are many supplies that are excluded. The foremost supplies include basic food, health, education, water and sewage facilities and financials. Broadening the GST base will minimise exclusions, consequently items that were previously untaxed will now be taxed. Up to $21.6 billion will be generated in extra revenue each year, which would enable vital reductions in indirect taxes such as income tax. By broadening the base, all socio-economic classes will be impacted. While low-income earners would spend a high percentage of their income on GST-exempt items, compensation will be implemented to combat the budget constraints. Welfare must be addressed through direct welfare payments rather than through exemptions to all taxpayers. Broadening the base will have a lasting and positive impact on the Australian economy and a taxation system.
GST is part of everyday life. Whether the current GST rate is increased or the current exemption list is reduced, the cost of groceries or the cost of household bills are going to change. To maintain the lifestyle Australians have become accustomed to, a combination of both GST rate increase and a broadening of the tax base will achieve the most effective result. Ultimately, this will positively boost the economy regardless of your income level.